This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. U.S. crude oil refiners this quarter will pull back from red-hot summer run rates as weak gasoline margins and plant overhauls cool operating goals, according to company statements and oil analysts. Refinery executives are aiming for low 90s utilization rates this quarter after running in the mid to upper 90% range most of the year. A pullback for seasonal maintenance and a greater shift to producing distillates have reduced production, according to company executives, analysts and U.S. government data. Production will be enough to keep gasoline prices tame with demand weaker than the production trims, said analysts. Refiners have kept producing gasoline at high rates to supply more distillates. Venezuela's state-owned PDVSA is in talks with local and foreign oilfield firms to hire equipment and services that would allow it to revive depressed output, sources close to the meeting said, after the U.S. relaxed sanctions on the country. The U.S. Treasury Department in October authorized for 6 months the production and export of Venezuelan crude, gas and fuel, the procurement of goods and services, new investments and payments to PDVSA with few limitations on business partners. The general license authorizing those activities is subject to compliance with a key electoral pact between President Nicolas Maduro's government and the opposition that outlines the path to a presidential election in 2024.
Moving on to the top news in the energy sector.
China's oil refinery utilization rates are easing from record third-quarter levels as thinning margins and a shortage of export quotas discourage plants from raising output for the rest of 2023, according to traders and industry consultancies. The drop in refining output could reduce crude demand from the world's top importer and cool its fuel exports, capping global crude prices but supporting refined product prices and refining margins in Asia. China is expected to process 15.1 million barrels per day, BPD, in November, down from 15.37 million barrels of oil per day in October, consultancy FGE said, primarily because of run cuts at small independents, known as teapots, and state refiners. Oil prices hit fresh 2-1/2-month lows on Tuesday as mixed economic data from China offset the impact of Saudi Arabia and Russia extending output cuts. Brent crude futures were down $1.65, or 1.94%, to $83.53 a barrel as of 0920 GMT, while U.S. West Texas Intermediate crude was at $79.21 a barrel, down $1.61, or 1.99%. Both hit their lowest levels since late August. The premium on front-month loading Brent contracts over one's loading in 6 months' time was also at a 2-1/2-month low, indicating market participants are less concerned with current supply deficits.
Next, we have the top news in metal markets.
China's copper imports hit a 10-month high in October, customs data showed on Tuesday, as declining domestic stocks and firm demand underpinned buying activity. Imports of unwrought copper and copper products, used widely in the construction, transport and power sectors, totaled 500,168 metric tons, the highest since last December, data from the General Administration of Customs showed. The data includes anode, refined, alloy and semi-finished copper. That marked a jump of 23.7% from 404,414 tons last October, when industrial demand was hurt by the country's stringent COVID-19 curbs. Gold prices fell to a near 2-week low on Tuesday as the dollar firmed and safe haven demand slowed, while investors awaited comments from Federal Reserve officials, including Chair Jerome Powell, for more clarity on the interest rate outlook. Spot gold fell 0.5% to $1,968.30 per ounce by 0717 GMT, its lowest since October 25. U.S. gold futures fell 0.7% to $1,974.20. The dollar rose 0.3% after hitting a 6-week low in the previous session, making gold more expensive for other currency holders.
We will now look at the top news in the agricultural sector.
China's Commerce Ministry on Tuesday said it will require traders of crude oil, iron ore, copper concentrate and potash, which are subject to import licenses, to submit real-time information on shipments as part of efforts to stabilize trade. It will also require exporters of rare earths to submit information under the new rules effective from October 31 this year for 2 years. The goal is to promptly and accurately grasp and scientifically judge the import and export status and trends of bulk products, guide foreign trade operators to import and export in an orderly manner, reduce blindness, provide a basis for risk avoidance, and do a solid job in stabilizing foreign trade, the ministry said in a document on its website.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.